a warm welcome to you, my dear children. We meet again with Chapter 2 of Unit 9. Chapter 2 of Unit 9. That is Bank Account and Bank Reconciliation Statement. Bank Account and Bank Reconciliation Statement. Well, to start with, in the previous session, I actually had a short discussion right at the start, and we took the cover page of your textbook, the cover page, and the breakdown of subtopics. We went through one by one from each from the first subtopic to the last subtopic, each and every one. And in that breakdown of subtopics, I told you children, I made it clear to you that we are going to learn how to prepare the bank account, the bank book. Some say bank book, some say bank account, it doesn't matter. The bank account or the bank book. And we learn depositing checks, the recording of depositing, issuing checks, how to record issuing checks, how to record dishonoring checks or dishonored checks. In simple terms, in real life, day-to-day life, we say checks bounced. Maybe you have heard. Businessmen, they always, with a very upset mood, they say, check එක bounce වෙලා. It means that the check has been dishonored. These words you should know because we are talking about business. And in the local context, how these terms are used. Sometimes dishonoring checks or dishonored checks. These terms are not used. People say, check return. Check එක return වෙලා. Have you seen these expressions? They get upset, really upset, when a check gets bounced. But the real term, the proper term is check has got dishonored. You're going to learn about all this, right? And furthermore, we are going to move on to bank reconciliation statement, and we are going to prepare a bank reconciliation statement. Not one, many reconciliations. Right. Okay, good. Today we have a check on board. We have a check on screen. A check. Let's read out the text from the textbook. Issuing of checks. Payments can be made to creditors, purchases and expenses by issuing checks. Here we mean, children, without cash, without making a cash payment, we issue a check. We take the checkbook. We write a check. That's easy. We write a check. All right. Sign it. Issue the check to whoever party, to whoever we're going to pay. We just pay with a check instead of cash. That is the meaning of issuing checks. So we can issue checks likewise to creditors. We can issue to creditors. When we want to, when we have to pay them, right? We can pay with cash or we can pay with a check. It doesn't matter. They will accept. No questions asked. It's easy for us to issue checks. I mean, even though we don't have cash at hand, we can make a payment with a check. Easy, right? Can issue checks for purchases when we purchase goods. Purchasing goods, bulks of goods. We purchase from our suppliers. More stock in the business. And for those cash purchases, we pay not with cash, but with a check, right? We pay with a check. right? So for purchases and for expenses. For expenses such as if we want to pay the building rent, we can ask the landlord, මහත්තයා මේ මාසෙ check එක මේ rent check එක මම එවන්නම්. We can ask him if he is okay to accept a check for our rent. They accept, all right? So we can pay these expenses with checks by issuing checks, right? When a check is issued, it is a common practice to complete the check and its counterfoil. Something important, something you're going to learn in the future in your grade 11 textbook, in the grade 11 syllabus, first unit, the first lesson. You're going to learn in detail about banking and accounts which are maintained in banks, okay, including current accounts. Current accounts are the accounts which provide the facility of checks. You should know that. Current accounts are the accounts which provide the facility to the customers, to us. Which facility? The check facility. No other account provides the check facility but the current account. Okay, so these facilities are provided by banks through current accounts. You, me, anyone who want to use the facility of checks must open a current account in a commercial bank, right? So when a current account is opened, a checkbook will be provided to the account holder, right? The current account can be opened by a business under your business name or under your name, your personal name. It doesn't matter. I can open a current account in a commercial bank under my name, Prabhat Ranasinghe. So my account belongs to me and the checkbook will be provided to my name. Got it? But if I open the current account under my business name, let's say I have a business, Manahara Bookshop. That's my business. I have a bookshop. I can open the current account under the business name, Manahara Bookshop, under the name of Manahara Bookshop. Then the checkbook will be issued to the business name. All right. Here, the name of the business will be mentioned instead of my name because the current account was opened under the business name. You got it? Right. So, likewise, children, when a check is issued by the account holder, the checkbook is with me. I am the account holder. All right. And when I issue a check, all right, from the checkbook to anybody whom I need to pay, when I issue a check, there is a part on the checkbook which does not go with the check leaf. That is called the counterfoil. I will show you. It is common. It is a common practice to complete the check and its counterfoil. This is what I was talking about. Counterfoil, which is the reminder of the check leaf in the checkbook. All right. This is what I have been explaining to you. This is called the counterfoil. Counterfoil. All right, 2 words. Counterfoil. But it is pronounced and used as one word. Counterfoil. Counterfoil. Okay. This is the counterfoil. This part of the check does not go with the check leaf. Check leaf. Alright. In other words, when you tear the check leaf from the checkbook, like this, and when you issue the check, this part remains in the checkbook. Alright. The dotted line, the dotted line is here. Right? This is the dotted line. This is the dotted line. From this dotted line only, the check will be torn. You know, you tear the check out. And this part, the check leaf, is given to whoever, is paid. The check leaf is provided to whoever we need to pay. This part remains in the checkbook, the counterfoil. Okay. The important information which is mentioned on that check, such as the name of the payee, such as the name of the payee, amount of the check, date of the check, the reason why the check was issued. All these information which are important and which are mentioned on the check should be mentioned on the counterfoil too. See the date of the check, the payee's name, and the amount. I'll number them and show you. If you name of the payee, number 1, it's here. Yeah. Amount in rupees. Oh, let's take date of the check. It's here. Amount of the check. It's here. Right? These information, such as these 3 information, and if you want, if necessary, any other information too, should be mentioned on the counterfoil. This is the counterfoil. Okay, that is what this text is trying to explain, is trying to demonstrate. Okay, so the children, this is a check. This is issuing a check. This is how you write a check onto a payee's name and pay that person any amount you need. This paying of checks, every check that you pay to whoever the party, must be recorded in your bank account, in your bank book, just like paying cash. If you pay with cash, that transaction, that payment is recorded in the cash book. Okay, but if you pay with a check payments are recorded in the bank book. Simple. Next slide, children, we have issuing or paying with checks. Right? Let's read out the text. The details of payments made by checks are recorded in the payment vouchers. That is the source document. Payment vouchers. I'm going to mention what payment vouchers are, but I don't need to mention this here because you know already payment vouchers are. What payment vouchers are? What are payment vouchers? Source documents. Source documents, yeah. Source, I'll just write docs. Source docs. So when a check is issued, the source doc is the payment voucher. All right. Details are recorded in a payment voucher, all the details of the check. Accordingly, when payments are paid by checks, the payment voucher is used as the source document to record such transactions. We already have marked it. The same thing is explained in the next sentence. Accordingly, when payments are paid by checks, the payment voucher is used as the source document to record such transactions in the bank account of the business. So, the bank account, you record the payments by using the payment voucher as the source document. Right? When payments are made by checks, the balance in the bank account of the business decreases. Yeah, obviously, of course. What else? When you pay by checks, when you pay more and more checks, when you issue more and more checks, when you issue more and more checks, you write more and more checks. 10,000. Issue the check. You write another check to BizBoom. There's a company called BizBoom marketing company. You pay them 50,000. You issue that check to them. You issue another check to a person called Sirisena. IO Sirisena. Then you write a 75,000 check. Sign it. Issue a 75,000 check to IO Sirisena. More and more checks you issue, the balance in your bank account, the cash balance or the money in your bank account decreases. Bank balance decreases. That's what it says. Okay. So the double entry obviously must have the bank account and the relevant payment account. It's mentioned here. Okay. In the double entry, you must have the bank account because bank money goes down, bank decreases, cash at bank decreases. You know what principle is applied, what principle is used when recording transactions in the bank account. From double entry principles, which principle is used? Is it the liability principle? Bank balance, bank account is a liability to us. No. Is it a expense? The bank account, the bank balance. So you should use the expense principle. No. Just like the cash book, children. Just like the cash book, the bank account also, it is an asset account. So it is an asset to the business, whatever the business is. If the business has a bank account, that is an asset. And when recording in the bank book, when recording related transactions related to the bank account, asset principle is used, principle of assets, the double entry principle for assets. That's why when we pay with checks, when we issue more and more checks to more and more people, when you issue more and more checks to more and more people, the cash at bank or the bank balance decreases. Asset decreases, credit, right? And the relevant payment, the relevant expense account is debit, because expenses increase, debit. All right, that is the double entry principle. Like I said, here is the double entry principle, children. It's here. Accordingly, the relevant double entry the double entry for paying with checks, paying of checks or for check payments, the double entry principle, and the double entry is given here. All right. Expense account, the relevant payment account, debit. Bank account, credit. Because the bank balance decreases as it decreases when you pay. Let's write a check, shall we? Let's write the check. Let's write this check. Let's complete this check. Okay. The bank is People's Bank. And the check has been crossed. I'm not gonna mention anything about check crossing because it's not really in this lesson. It's not relevant to this lesson, but it's gonna be taught soon in one of the coming lessons. Okay, crossing checks. Ignoring that, let's fill up the important things. Date. The date is filled. And it's a very, very far away date. I mean, a date in the past. So let's fill with a valid date. Okay. I'm going to mention 10th January 2022. That means next year January. The date is 10th January 2022. Next year, January, first month. First month, 10th, January 10th. Children, which means this check is valid. The check can be taken to a bank and, to get the cash. Whoever who gets this check should go after 10th of January, right? 10th of January. It's a future date. Okay, you can't take the cash. You can't bring the check and cash the check, or you can't go to a bank and take the cash, take the amount before 10th of January. Okay. You can do that. You can give a dated check. Dated check. Pay. It's here. It's printed. Pay. I'm gonna pay I.O. Sirisena. I.O. Sirisena. Then I'm gonna cut O bearer. 1,000 amount in words, children. 1,000 rupees. Only. 1,000 rupees only. Okay. Oh, and the amount is mentioned on this check. I'm not going to pay this much. So I'm going to mention 1,000. Okay, 1,000. And I'm going to put my signature here. If I have a company, if I have a business, or I have a personal seal, business seal or personal seal, the seal or the official stamp could be put, seal can be, the stamp can be put here, all right, with my signature. And the basic, the most vital, most important information is already filled, all right. Yeah, so that's it. I'm gonna pay from my account, from my bank, to a person called I.O. Sirisena. To a person called I.O. Sirisena. I'm going to pay him 1,000 only. Okay. Which means if this man is a creditor, if this I.O. Sirisena guy, if that guy is a creditor in my business, to record this transaction, the double entry should be bank Credit or debit? Anybody who knows, who remembers? Credit, right? Credit. Bank credit, because bank money, my bank balance goes down, asset decreases. Bank credit. Creditor also goes down, my liability decreases because I'm paying this creditor now. Creditor also decreases. So creditor, debit. Asset decrease, credit. That's why bank is credit, bank account credit. Liability decrease, it's a debit. So creditors account debit. Creditors account debit, bank account credit. So children, with the basic information that you need on how to issue a check, how to write, complete and issue checks, and the double entry when you issue checks. To record paying with checks, you need to know the double entry, right? To enter all the payments that you have done by checks. Recording double entry of issued checks or paying with checks. With that, the basic information that you need, we'll wind up this session. In the next session, we are going to prepare a bank account, a bank book with the relevant ledgers. And we are going to balance the bank account. And balance, we will bring the balance forward, or balance brought forward. Furthermore, children, we have several more things to learn when recording transactions in a bank account, such as dishonoring checks. Dishonored checks. With that, hoping to meet you soon in the next session and learn how to record transactions related to bank accounts. With that, children, we will wind up this session. See you very soon with the next session. Thank you.